What's up, everybody? This is Dre from Dre Trades, and today is going to be an interesting and fun video because we are going to drop the secret sauce into investing, the secret sauce into making tons of money, working our way up to $1 million on relatively safe trades that no one wants to put on, that I talk about on this channel all the time. And I'm going to explain why you want to put those trades on. And then I'm going to show you some example trades that we can do to get you there. Remember, investing we're not trying to make that mill in a month or two or even a year. Let's focus on 10 years and beyond. I think that's reasonable for everybody, and we can do it safely. All right, so let's get started. This is a compound interest calculator. We're going to start right here because I need you to see something first. All right, so this is the compound interest calculator. I got it from MoneyChimp. For the most part, you could Google compound interest and get thousands of calculators. Just pick one. I like this one because it's fairly simple. And I could just type in some numbers and we could see some results. All right, so we're going to start with $1,000. I'm going to make it simple, $1,000. I'm going to say that's our current principal. Our annual addition, we're not going to add nothing to it. Nothing. Okay, we got $1,000. I'm never going to put another nickel into my account. Years to grow, I'm going to go out 20 years, all right? So if you're 30, you'd be done by 50. You're 40, you'd be done by 60. You get the picture. Interest rate. Now, here's the thing, because I'm going to teach you how to make trades just to make 4%. I tell you these 4% trades, and no one is interested in it, okay? I say, hey, make 4% in 30 days, and no one's interested in it because $1,000 is like, oh, make 40 bucks. Oh, I'm not interested in that. I don't want to make 40 bucks. But I'm going to show you why that is important. Okay, so if you can make 4% every 30 days and then annualize that, well, it'd be about 48% roughly, right? So that's 48% a year, man. Where could you get that, man? This is what we got to remember. We got to remember the big picture. All right, so we can make 48% a year on 4% trades every 30 days. Compound interest, well, we're going to try to do it every 30 days, so it's going to be 12 times a year. Make additions at start, end of compounding period. At start. All right, so let's calculate that to see how much money we'll have in 20 years with this $1,000. Boom. $12,246,202. Did I say that right? Is this a mistake? Damn. Wow. 20 years, 12 mil? Nah, this is the real deal, man. This is the real, and I'm saying 4%. Let's say I'm half right, okay? And let's say 24%. All right, 24% interest, same calculations. And let's see what we get. All right, 115,000. So I don't want to be half right, but that's still a lot of money because why? We only put $1,000 in. Can you imagine just taking 1,000 in 20 years from now? That 1,000 is like times 115. Crazy. All right, so we're going to focus on 48. We want that 4%. All right, so I'm going to put that back in here. And let's play with the numbers some more. Let's say it says annual addition. Let's say I add $25 a week. Okay, $100 a month. Those $1,200 a year, right? Annual addition, $1,200 a year. Everything is the same. Let's calculate that. Wow, $44 million. $44 million. Now let me see if I can drop that down back to 24. Let's see what we get. All right, 701,000. That's still some serious money, and that's basically saying we're going to make 2% every 30 days. Wow. I'm going to bring it back to 4%, 48%, right? All right, so let's do one other figure. Let's pretend, hey, some of you guys got more than $1,000. Say you got 10,000, all right? You got 10,000 in your brokerage, and you're going to start this plan. Let's go ahead and calculate that. $154 million, $299,549. Who needs to play Powerball? Who needs that? We all going to be Powerball winners in 20 years. right? That's a lot of money. So you can't wait 20 years. Let's say you do it in 12 years. Well, you still have 3 million. You can get to 3 million in 12 years. All right, let's do 9. 9 years. I can't wait. I want single digit. It needs to be visible. $868,000. All right, so how do we do this, Dre? How do we do this? You got me excited now. I want to be a multimillionaire in 10 years, slightly over 10 years. How do we do this? Well, first of all, subscribe to the channel. Click that like button. Click that bell. And I show you all the time, man. I show you, but no one watches those videos because they don't see the big picture. All right, so let's go to the stock chain. And you know I talk about Amazon a lot, and I'm going to show you why, because I like big price stocks. So this is the option chain for Amazon. All right. And remember, in these parentheses right here is the days to expiration. And I focus on these because I like to do it 30 days out, right? I said 30 days, we're going to make 4%. So I'm going to click on that, open this chain up, and I know exactly where to go. I'm going to go somewhere around this 1312 delta. That means for the most part, we got an 88% chance of being correct. And if I sell a put credit spread right there, I sold the 2750 and bought the 2740 for protection. Okay? So basically, to do that trade is, they're going to give us $1.05. $1.05. How much does it cost to do that trade if I were to get $1.05? Here, let me lock that. Let me lock in $1.05. All right, because it's floating all over the place. Lock it in here. I'm going to do $1.05. Okay, so to do that trade, that's going to cost me $895. It's if you see, I sold the 2750 and I bought the 2740 for protection. Now, that is 10 points wide. And when we talk options, you got to times it by 100. Everything is times by 100. So that 10 points wide cost me $1,000. All right, so it really costs $1,000 to put on a trade. But they're going to give us $105 right now as soon as I press this button. Okay, so really, it only costs $895 to put the trade on. That's what we have at risk. That's what you would need in your brokerage account to put this trade on. So if I got $895 at risk, and I take my 105 and divide it into my 895, I come up with 12% interest. 12% on my money. I won't call it interest. 12% on my money. Wait a minute. All I'm trying to do is get 5%. I can actually get 12%? Yeah. Imagine you get the 12%. Just add those numbers up. Go back to the calculator. It's like, wow. Yeah, but we're going to do it this because here's the deal. We're not even going to wait 29 days to get out of this trade. We're just going to take half that. So I'm going to buy this back basically roughly around 50 cents or $50. And to buy that back, most likely, more often than not, we will be out of this trade in 10 to 15 days. So that even sounds better. So I got half the money in 10 to 15 days. And guess what? I do it again. Soon as the trade closes out, boom, I put another one on. And I just keep doing it. And I use that money and that's the compounding, and add that into the trade and keep making this money, keep doing these trades with all my money. On different kind of stocks, you don't necessarily want to do it on the same stock. You want to kind of diversify. Find different stocks that you think is going up, put these trades on, and keep making that 5% on your money. Now, like I said, this is a 10% trade. By the time we get out, it'll be 5%. Now, let's look at Amazon stock. So basically, we're in trouble if this thing trades below 27.50. Anything above that, it's a winning trade. But it can get scary, okay? It can get scary. So let's look at the chart. Here we are. Let me clear out all of this. 27.50. Draw a line. A line, and this roughly, that's close enough right there. So we're basically saying Amazon needs to just stay above here, this line, and if it does that in the next 29 days or even less, it's going to be a winning trade. Up the weekly so you can see a better picture. We sold it way down here. So a lot of times you watch me put these videos out and I say, yeah, I sold the put, sold the put spread, credit spread. And then I'm like, oh, make 10% on your money. Nobody watches those videos because they're not seeing the bigger picture. Once I make that 10%, boom, I roll it again, and I roll it, and I roll it, and I roll it, and I keep doing that. And next thing you know, your account is growing, right? It looks something like this. That's what it looks like. On safe trades, like this. I mean, Amazon hasn't went below this line. Last time it was below this line was June last year. That's crazy. All right, we just needed to continue to stay where it is for the next 30 days. Now, of course, anything can happen. All right, so it's not 100% guaranteed. The numbers are telling you the trade is 88% guaranteed to be right. All right, so there is some danger in there. We need to discuss that on another video. I'm just going to talk about this trade, and this is why you want to take trades like this to make the money, to make the millions, to get to the millions. All right, this is the stuff that people charge you for. Here it is, Dre Trades, you're getting it for free. You can learn the stock going up and down, but how to trade it is what the people charge you for. Well, you're getting it for free here. There it is. All right, so that's how you do such a trade. Let's look at Ford. Remember I was talking Ford. Hey, make such and such on your money. By the way, Ford right now is trading at $10.10. Yes, I was talking about it at $8.50, $8.80, somewhere in this range. See, I got a circle showing you the breakout, showing you the deal. So Ford is a cheap stock. We don't necessarily have to spread this thing. We know by looking at the monthly, it's going higher. We see the breakout, multi-year breakout. So we could get a little more risky with a stock like this because it's only 1,000. And if we own it, so what? Then we start selling call spreads on it. That's another video. So let's look at the option chain. All right, so 30 days out. It's trading at 10. I think it cracked 10. It's gonna stay there and go higher. I want to sell. I'm just gonna straight up and sell. I'm gonna sell this 10 put right here. And here's the price. Bid 46, ask 48. So let's say I get $48 for that. Sell. So we're just going to straight up sell the put. And what that means is if this thing drops below $10 come February 12th on expiration date, I'm going to get put those shares and it's going to cost me $10. But get rid of the spread. I sold the wrong thing. Hang on. Sell single. They're going to give me $46 to do that trade. We're going to say we can get 48. All right, so 100 shares of Ford at $10 will be $1,000, but they're going to give me $48 for it. So really, if they give me those shares at $10, I only paid $9.52. Only paid $9.52. Let's go back to the 4-hour chart. That means I'm right here with the purchase, right at the breakout point. That's a good buy. I'll take it. Let's go back to the trading tab. All right. So it really only cost me $9.52 if I were to get that. So if we take now, of course, if this thing stays trading above $10, boom, I keep the money. I don't get the stock. Let's see how much I made. All right. So $48 divided by $900.52. It'll be 5%. We're going to get 5% on that in 30 days. And that's our target. That's what we're looking for. 5% on that one. This is not a spread. This is just straight up selling a put. You could do 2 of these, right? Let's say you do 2, right? It cost you, let me see, $9.52 times 2. It'll cost you $1,904, right? But you'll get 48 times 2. Right? You'll get 96. my math is getting worse. So you get $96 for doing 2, right? So you could do the math on that. It's the same math, right? 96 divided by 1904 because that's your risk, 1904. That's what it would cost to do this trade. and it comes out to 5%. Right? So if as your account grows, you say, hey, boom, I'm going to do like 10 of these, 20, whatever. And you diversify. Okay, I'm going to do a little Ford, put a little trade on Amazon. Let's go to Microsoft. That stock never goes down. Right? Let's look at Microsoft, and I'll just go ahead and call it a day. Let's look at the chart. Nice and sideways. Kind of really quick. You could see that support. All right, so let's see what we can get in 30 days. I got 29 days, by the way. This one is an expensive stock, so we don't want to really sell a naked put because that's going to cost us $21,000. But as your account grows, you could do that. Right, so we'll come down and we'll sell. Can we sell this 195 vertical? 195, 190. This is better because it's only $5 wide. Right? We're going to sell that 195 and we're going to buy the 190. All right, so that's $5 wide, options, everything is times 100. So that's going to cost you $500. But it looks like I can get 48 cents for that right now, which is $48. So minus $48, that's going to bring us $452. So to put this trade on, it's only going to cost us $452. That's what we have at risk. If all goes hell, we're only going to be out $452. All right, but it's a safe trade. The delta right here is basically telling us we're going to be 86% right. All right, so what is that math? It's going to cost us $452. We're going to get $48. It's changing on me. Let me lock that in here. So 48 divided by 452 is 10%. Actually 10.6. We rounded off to 11%. All right, and once we got that trade on, we just reverse this, go boom, put another order in. Let's try to get half. Let's buy it back at 24 cents. Change this to good to cancel. GTC. Buy it back as soon as that thing hits 24 cents and confirm. And I guarantee you, in less than 29 days, you're going to be buying that back at 24 cents, and you would have made a nickel on your money. 5%. All right, and we could, boom, put the trade on again. All right, so that's why it's important to think small to get big, right? Starts off small, but then it gets big. You know what I'm talking about? Well, anyway, yeah, the small trades are important. And I like, for fun, I like to go for the home run. You'll see me putting home run trades on, but because it's hard to stick to this plan because it's boring. And boring works. Boring is what makes you money. Boring. You tell me who you watch out there on YouTube or anybody who's going to have millions in 10 years. They're going to still be messing around with their little account because they went down and up, still just going up and down like the stock market. And your portfolio will look like this steady growth chart. This is what my equity curve looks like. But for the last 6 months, it's been going sideways. My trades has been sucking. I ain't gonna lie. Have some good ones and bad ones, because I lose my focus as well. I'll get more aggressive. But just if you could stay focused and you put trades on like this, I guarantee you your equity curve will look like this and you will reach that number. I did a talk with someone. I use you rags to riches. I think we had that conversation the other day, and I think you said you had a great year, man, and you had like 60 grand or something in your account, right? Let's change it back to 20. Let's say you did this interest rate 48, compounding 12. Boom, you'll be at $766 million because you're starting high. I mean, this is real. This is real numbers. This is math. You can't fake it. You can't fake it, man. This is the real deal. And this is what I do. And you're getting it for free. All right. Like I said, but when you start getting into big numbers like that, this trade becomes harder because now you got to allocate hundreds of thousands of dollars a month and it gets scary. So to be honest with you, this one, it's not as easy as to reach, but if you can do it, the math works. All right, you just take the money that you keep making every month and keep reallocating it to a new trade that's going to expire in 30 days or 30 days or more, by the way. We're using a roughly 30 days. You can go out to, 45 days on this, anywhere between 30 and 45 I like. All right, because that's where the theta curve starts to decay. That's where these options just start to just peel off to nothing. All right, so that's why you don't want to buy these. If you're thinking about buying any option, just jump down here. Buy these. Don't buy these. All right, so there's the video. Let me know what you think. Let me know if you like what we talked about today, because I'm not going to be putting this video out all the time because I might package it up and sell it. But I don't get the views like that. And I know everyone that watches me, I appreciate you. And there's the key, man. There's the secret sauce. Just like I said in the beginning of the video. There it is. You ain't got to follow nobody's course. I just gave it to you in 10 minutes. All right, so go ahead. Try this style out. Learn about options. Learn about credit spreads. Hey, how do you do that? You can watch Dre Trades. You can subscribe. I talk about credit spreads here and there. I don't do it that much because nobody watches those videos. Because it's boring. I got to talk about, oh, man, yo, let's buy that Tesla, man. Tesla is hot. I'm going to buy like 10 calls. Look, I'm messing up my voice. I'm going to come down here, man. Yeah, I'm going to buy like 10 of these. It's $8,000 a piece. I'm going to be rich. I'm going to be like Elon Musk. If that don't happen, hey, you will be like Elon Musk if this thing pops. But if it don't, you're going to be in the poorhouse. Quick. Anybody that trades calls, I know you all know. You all know. It caught everybody. Right? Like a day like today. It had a good day yesterday, I think. People was probably in the calls. Now it's down $7. Calls are getting destroyed. Especially these ones between 1 and 45 days. So, there's the video. Check the channel, like I said, subscribe, hit the bell. Catch me on Twitter. Catch me on Instagram. Dre Trades 2 right here on YouTube. Hit the comments. I reply quick. And thanks for watching. If you have any questions, comments, Twitter, all that. And share this out. Let everyone know the secret sauce. Because I might take this video down, man. I don't know if I want to drop the secret sauce, to be honest. But I love you guys, so I'm dropping it. All right, so thanks for watching. I'm Dre Trades, and I'm out.